I'm at Georgetown University's McDonough School of Business for the latest in the Real Estate Luminary series. Joining me is Brian Gill, Adjunct Professor of Finance and Real Estate at Georgetown University and Managing Director with Allegro Advisors. Brian, the last time that we talked, the real estate capital markets had just started to recover. What's your sense of where things are now?
I think you've seen tremendous liquidity coming into the market from a lot of different sources, both private and public, and it's continued to be effusive, I should say, in terms of real estate assets that have been trading and the pricing and the interest in every asset that has been trading, particularly in what we would call the gateway markets on the coastal areas of the United States like Washington, D.C., New York, San Francisco, Boston, and so forth.
And for the better part of 2 years, we've been hearing about this anticipated rush of acquisition activity, which really hasn't materialized. Where do you think things stand there now?
You've seen the capital flow to the places where it needs to be in order to take advantage of those acquisition opportunities. But what you haven't seen is the volume of transactions that is anticipated with that capital being there. And because of that, I believe that is what has bid up the pricing in the markets that you've seen, and particularly to, some would argue 2007 levels in certain markets in the country. And I think there's at least some cause for concern that the capital markets aspects of things that are pushing capital to these bidding situations are moving a little bit more aggressively vis-a-vis where the fundamentals actually are coming. So what I think that maybe hasn't yet come to fruition the way that the capital markets seem to suggest is the fundamental growth of rents, occupancies, unemployment ticking down, so forth, that would make this pricing level more sustainable. So I think there might be some sort of a mismatch there.
Lastly, your firm also deals with international sources of capital. Where are you seeing those investors looking to put their money?
I think the coastal gateway markets are at the top of everyone's list in terms of where they want to be. I think in up and down cycles, particularly in down cycles, investors often flee to safety, and I think that safety in this particular instance means they want to be in markets that they believe they understand and where they believe that the long-term fundamentals are going to be sound. And then within that, they're most interested in stabilized core type assets. And so on account of that, you have a flood of public money and a flood of private money all chasing the same assets, driving prices to what I think are probably slightly frothy levels.
Brian, thank you very much for joining us.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.